Hello, Michael here with BentOak Capital, checking in with your June 2025 market update. As always, we'll keep it brief and focused on what's new this month. Be sure to stick around until the end for an important disclosure. As we progress through June, markets remain focused on a challenging environment shaped by shifting trade policies, an uncertain economic and corporate earnings outlook, geopolitical tensions, and continued pressures in the bond market. Several recent developments could carry important implications for investors. First, trade policy. A recent court ruling at the end of May blocked much of the Trump-era tariff framework, adding a layer of uncertainty to trade policy. While the administration has other legal options and is expected to maintain tariffs near current levels, rising geopolitical tensions, particularly with China over critical rare earth mineral exports and Taiwan, highlight the ongoing risks that could affect markets. Second, a solid earnings outlook, but maybe caution ahead. First quarter earnings were broadly positive, with nearly 80% of companies beating expectations. Much of that strength came from mega-cap tech firms like the Magnificent Seven, which drove nearly half of the 13% earnings growth for the S&P 500. However, as we look toward the second half of the year, economic and profit visibility remains limited, and it's unclear if earnings strength alone can sustain the market's momentum. Third, equity valuations. Markets appear to be downplaying the potential economic impact of tariffs, which could make the recent rally vulnerable. While new market highs are possible, it may take a series of positive surprises to offset inflationary pressures and potential profit margin compression. Investors would welcome greater clarity on trade policy, which could allow attention to shift towards tax legislation currently under debate, especially as preserving tariff revenue could play a role in extending the 2017 tax cuts. Fourth, bond market headwinds persist. The bond market continues to face upward pressure on yields. Factors include expectations for inflation driven by tariffs, rising global interest rates, limited foreign demand for U.S. Treasuries, and ongoing concerns over federal spending. Unless economic data begins to weaken, volatility in the Treasury market is likely to persist as investors adjust to a higher for longer rate environment. Looking ahead, corporate earnings and profit margins are expected to receive growing support from the integration of artificial intelligence across multiple industries. As we move further into the summer, several key factors will continue to shape market direction, including upcoming inflation data, progress on trade negotiations, central bank messaging, and developments related to the tax bill. Before we wrap up, we have a quick note. Starting next month, we're giving this monthly video a new name, Market Navigator. It's the same helpful insights you've come to expect, just with a name that better reflects our goal of guiding you through any market landscape. So be on the lookout for Market Navigator in your inbox in July. No matter the market environment, our priority is helping you stay informed, confident, and on track with your financial goals. If you have questions or would like to discuss how recent developments may affect your plan, your advisor at BentOak Capital is here to help. And if you're not currently working with us, we welcome the opportunity to learn more about your needs and how we can support you moving forward.